Dow 20,000, old hat. The big question, when will the Dow hit 30,000? I'm Jack Otter, editor of BARRON'S.com. I'm here with Jack Howe, senior editor at the magazine and the scribe who penned the Dow 30,000 cover. Before we get to that, though, let's just briefly do our Monday thing. We talk about stocks moving up. The Dow is down 200 last I checked. But amazingly, in the Roundtable, Brian Rogers, the gentleman and chairman of T. Rowe Price, named 5 stocks. Last I looked, every single one of them was up, even on a day when the Dow was down 200.
I don't know how you go 5 for 5 with the Dow down 200, but he did.
Yeah, CVS, Casey's General Stores, Walt Disney, Bristol-Myers. Legg Mason, his crosstown rival, was kind of just on the bubble, down a point, up a point, but still pretty impressive.
A lot of these, by the way, are like fine businesses, fine stocks that have sold off. Like CVS has tumbled, Disney has tumbled. If you've ever wanted to own shares of Disney, they caught an upgrade this morning from Morgan Stanley. You know, the price certainly seems a better price than it was.
But let's move on to the broader market. You took the next big round number, but actually it's really not crazy. You said it would hit 30,000 by 2025. By my math, that's up 5 and change percent.
I know, it sounds really bullish, right? It's actually ho-hum returns for a while. And why wouldn't you get ho-hum returns? Look, you're trading, you know, you've got, if you forget about the Dow, look at the S&P just because the earnings estimates are better for it. You're trading at 19 times earnings, high-ish, not crazy, but high. There hasn't been any earnings growth for most of last year. We started to return to earnings growth. Numbers will get better as we reach the anniversary of that oil plunge that took about 5 percentage points of growth out of S&P earnings last year. So I think we reach a point this year. Wall Street says we're going to get 12% earnings growth this year. Wall Street almost always is a little too optimistic this far in advance. We see those numbers come down. I think when they come down, you're still going to have a high single-digit earnings growth number in 2017.
Which would be pretty good, actually.
Compares very well with what you have been getting. So let's say we get 7-8% earnings growth. I would imagine a situation where we get 5 or 6% in terms of a gain for the market, because if I'm asked to guess, I'm always going to guess reversion to the mean. If you're starting with a little bit too high of a PE ratio, I'm going to guess it's going to come down just a smidgen, add a couple points for dividends. You know, maybe you're making 7%-ish in the market.
Important to point out that, though I'm not the first person to say this and everyone's been wrong so far, let's say interest rates rise between now and 2025, which I think is a good bet.
Right.
That is another force pushing down those market multiple. That 19 maybe becomes 18, 17, 16.
Yeah, everybody says, what about the Trump economic miracle? Well, a little bit of it is already priced into the market, and if growth really goes gangbusters, then you get higher rates. That economic miracle doesn't necessarily bring higher stock prices, because you'll see rates push higher, then bonds begin to compete a little better with stocks for investor attention. So you could see growth pick up in the market, not do so well. You could also see, I suspect, by the way, the reason the market's tumbling today, you know, is you know, some of the headlines we saw over the weekend about you know, bans on certain visitors and so forth. I think there are a lot of people watching carefully. They're saying, I like the Trump who's talking about stimulus. I don't like the Trump who's talking about protectionism, and we're still not quite sure which Trump we're going to get. We could see some things that, you know, everybody's talking right now about Mexico. Should there be an import tax? We're going to build a wall. Someone asked me on TV the other day, hey, the wall we're going to build, that's going to help the economy, right? I was like, are you out of your mind? This is one of our largest trading partners. This is you know, when we bring around the Rust Belt and begin manufacturing all those goods, who are we going to sell them to? Our second largest export market.
So that's the manufacturing stuff. Now think about tech. So this morning, all the tech names were down. Why? Look at an email distribution list of those companies. You don't see the name Jack a whole lot.
Right.
You see a lot of names from countries that are worried whether they're going to be allowed in. That is not going to help the tech sector.
So look, at Barron's, we're for free markets, and we're hoping we will see less of this kind of rhetoric and more free market kind of activity going forward. We want to sell to Mexico. They are important. Don't fool yourself. We do not want to crater the Mexican economy. That will hurt us. And by the way, it will do nothing good for illegal immigration. You think if the Mexican economy tanks, that they're going to want to stay, more of them will want to come, the wall's not going to help. Let's be sensible on Mexico, and let's get this stock market to continue pushing gradually higher.
Thanks, Jack.
Thank you.